So here's what I believe that most people don't. You don't need a traditional bank relationship to get a great SBA rate and a fast approval. There are non-bank SBA lenders, and they can be just as competitive on rates and much faster, especially if you know how to position your file. And you might be thinking, well, aren't banks typically just always going to be cheaper than non-banks? That's not necessarily true. And some of you might also say, well, don't I have to lock my rate now or I might get crushed later? Also not true. So these are just some of the myths that I know keep people up at night that we have to debunk. Because even if one SBA lender says no, that doesn't mean that you're done. Because you don't realize that there's a conglomerate of different lenders that also represent the SBA program, and we need to pick the right one that matches for you, your business, your industry, your file, so we can get good approvals. That's why the truth is this, SBA programs, they're standardized. Rates are typically prime plus a small margin, and different lenders favor different industries. So again, a decline from one doesn't mean a decline from all. I'm Brittney Calloway, and my insights are around credit, business, and finance, and I help business owners turn credit into capital and capital into freedom. So today, I really want to break down the SBA rates, how they're set, 7A versus 504, as well as fixed versus variable, and how to get funded in 45 to 60 days instead of waiting forever to hear back from the SBA. So some of the SBA banks that are big banks that you guys know, they offer SBA alongside deposits. So that's a great fit if they love your industry and file, but often they can be slower and they're less hands-on in the process of helping you get funded. Now the non-bank SBA lenders, they do SBA only. So there's no checking accounts, their sole focus is approving SBA loans. So they might have similar rates, but they're also going to be often faster and sometimes more of an appetite for certain industries that are harder through traditional banks. So remember, the SBA 7A is working capital, so you can have flexibility with this. This is for working capital, refinances, goodwill, equipment, business acquisitions. Those terms can be up to 10 years, longer if it's acquisition, especially with real estate, and the max amount for the SBA with that is up to $5 million. Now, some lenders will go higher without real estate, but most of them are going to want collateral without question. Like I told you, in the 350 and up, you might still have to personally guarantee it. Now, the SBA 504, that's owner-occupied real estate, and it also covers big equipment. You can use this with commercial real estate and heavy equipment as you go ahead and apply for it. Now, with the structure of it, the bank wants to now see them being first, sometimes even plus the CDC second, and a down payment is going to be that typical 10% putting down for the actual loan. Those terms will go up to 25 years, right? And it also just depends on the asset that's attached to it. But most SBA rates are prime plus margin spread. That margin typically ranges from 0 up to 2.75% depending on the loan size and the risk. So example, if you're approved at a prime plus 2.0 and prime is at 7.5, your rate is going to be 9.5. If the prime drops, your rate then drops. If the prime rises, your rate's gonna rise. So that's an easy way for just rule of thumb when you're looking at it and calculating it. Now, when we think about what fixed versus variable terms in this, so the 7A is usually gonna be variable rates, right? Prime plus the margin. The 504 component often has a fixed rate, sometimes with the CDC portion. This can be attractive for long-term real estate, so we're not running the risk on the variable platform. With prime elevated, many owners choose variable on 7A to participate if rates are easier later. For the 504 real estate, that fixed CDC piece can be a powerful hedge too as well. So you really have to weigh it out with pros and cons depending on your business and the asset that you're doing attached to it, or if you're not doing an asset. But the rule of thumb is shorter term needs or flexibility 7A variable can make sense. And longer term real estate for stability, a 504 fixed component usually often wins. So it just depends. So remember though, with traditional banks, it can take up to 90 days, sometimes even more, if you don't have any mistakes, to get fully funded. Now the non-bank SBA lenders with this process that are built for SBA, they're gonna give you more guidance, more hands-on, correcting your application, and they're typically faster and they give you faster decisions and faster feedback for you to go ahead and correct it. Our team does this daily. We pre-screen, package, and match you to the lender that's most likely to say yes. That's why we routinely see 45 to 60 days funding once the file is actually dialed in. So if you want to book a call with my team, go to the funding lounge, the link below, because we're going to actually go ahead and pre-qualify you to match your business and your industry with the right lender so we can get faster yeses rather than denials and nos. But things you want to make sure you have as you're going to come to us too as well. You want to make sure you have at least your 3 years personal tax returns, 2 years of business tax returns, at least 2 years of business if possible, but we can work with it. And obviously the business financials, typically the profit and loss statements or the balance sheet of the past 3 years, as well as your year-to-date P&L and the balance sheet too as well. When you have all these documents, it makes it easier for us to quickly analyze through our calculations whether you're going to get approved or not. Also, your personal financial statement, which contains your assets and liabilities, fully up to date. And these are the things that we are really seeing right now, which is getting people funded. Anybody who's having recent tax years just showing profitability or having strong add backs or even a rationale explaining, right, their profitability or lack of, those are what's getting pushed through. Also, strong files are showing that the debt service coverage is going to support their actual new payment of what they get on the loan. Also, when you're coming in with a clean ownership structure and industry fit with a lender appetite, that's what's also creating more fundability for the applications that we're seeing. Because again, if we apply to the wrong lender for your industry, we will get more no's than yeses. So we want to make sure that you're sending us all complete documentation and it being ready. That's why I'm giving you this list ahead of time. So that way there's just no delays on our end or yours. Now, if there is a story that needs to be told, you have to tell it. So if last year's income dipped, explain why. What changed? What were some of the factors? What are you doing to bounce back? And if we're looking and comparing based on the lowest rate only, the term, prepayments, and the structure, right? We want to make sure that we really analyze this because the cheaper option overall for the life of the loan might not always sometimes be the best. It really just depends. So we want to make sure we're analyzing these before we actually pick a good lender for you to now stick with. But again, not to worry because our proprietary SBA calculator quickly plugs in your tax returns and financials and lets us know with high probability if you're going to be a fit before you wait months and months trying to figure out if it's going to be a good fit for you. If SBA isn't the best path, we can also pivot. There's term loans, lines of credit, equipment financing, inventory financing, right? So you don't lose time. Or even we can do business credit card stacking. So you have a lot of different options outside of SBA, but we know typically SBA is going to be the lowest rates that typically match for your business. So we still want to start there first, especially if you have all the documents to support that. So in my next video, we're going to cover how to take those profits and flip it. So when you get your money, how are you making sure that it's being allocated appropriately and that you're getting a 2x return on your investment? So go ahead and I'll see you soon.